Scott Groves with another mortgage mystery. What is FHAMIP? FHAMIP, or if you don't want the acronym, Federal Housing Administration Mortgage Insurance Premium. This can be very confusing if you're getting an FHA loan. And an FHA loan is basically designed to help more people get into more homes across the United States. The FHA, the Federal Housing Authority, or Federal Housing Agency, can't remember, doesn't really matter. They write guidelines that lenders then have to follow and interpret. They can do what's called an FHA loan at the particular lender with the FHA guidelines, and then they can send that loan or sell that loan to a government entity who will take that off the books of the lender and make the lender whole, pay back the cash that they just used to lend on the home, and then they can move on and lend more money to more people. Now, what's interesting about FHA loans is they tend to be a little bit more high risk. They have lower credit thresholds to qualify. They have expanded debt ratios, meaning you can have more debt and still get an FHA loan. And they have the ability to help you buy a house with as little as 3.5% down. So you can imagine a little bit lower credit threshold, a little bit higher debt threshold, a very minimal down payment. The FHA or the lenders who write these loans want to make sure that they'll be compensated if something goes wrong with the borrower not being able to pay their mortgage. So FHA mortgage insurance was created. And there's two components to FHA mortgage insurance. There's a fee that is assessed up front that the buyer can either pay in cash or normally they finance it into the loan amount. So let's say that the fee for getting an FHA loan at any given time is $4,000 on this particular loan. That $4,000 can either be paid in cash, which normally the borrower doesn't do because they're structuring the FHA loan intentionally so that they can put less money down. So that $4,000 could be paid up front with cash. Normally, it's just added to the loan amount and paid off over time. So that's the upfront mortgage insurance. However, there's another component to mortgage insurance which is very costly. It's currently running at about 0.85% of the overall loan amount divided by 12, paid over 12 months. And this monthly mortgage insurance is going to be added to your mortgage. I've seen it for the loan amounts that we do as low as, $150 and sometimes upwards of $800 a month for this mortgage insurance that's added to your monthly payment. And it's made as an insurance mechanism, not to insure you, the buyer, but you're paying this mortgage insurance as the buyer to basically create this pool of money that the lenders will pull from if somebody with an FHA loan defaults. So again, FHA loans are great for people that maybe are a little bit more credit challenged, or they're first-time buyers with a low down payment, or they're repeat buyers with a low down payment and a slightly higher debt-to-income ratio. So it's a great tool to get into a house. However, it does have these components of the upfront cost that gets added to your loan amount, and then that monthly cost that can really increase your monthly cost of ownership, sometimes to the point where it doesn't really make sense, nor is it affordable for the particular buyer. We did a couple other videos here where we broke down what private mortgage insurance is, which is usually cheaper than FHA mortgage insurance. Generally speaking, when I talk to clients, I'm like, hey, we could do an FHA loan with 3.5% down, but if you qualify and we can beg borrowers steal, not really steal, get some gift funds to get you to 5% down, then we can go with a conventional loan, not an FHA loan, which allows you to get private mortgage insurance. And these are the things your loan officers should be helping you structure and figure out to get you the best deal and overall package. Now, sometimes an FHA loan can look attractive because their rates, since the loan is backed by the federal government, their rates will tend to be a little bit lower than the conventional loan you might be able to get. But once you factor in that monthly cost of mortgage insurance, it makes sense to maybe look at another product. So FHA loans are great for the market they serve. FHA mortgage insurance is just a necessary evil if you have to get an FHA loan. But you should be talking to a loan officer like us so that you can make sure that you're structuring the loan appropriately and getting the overall best package. So if you're looking to buy a home, get pre-approved to buy a home, or thinking about getting an FHA loan, Or if you're approved for an FHA loan elsewhere and you want to find out if maybe it would be more cost effective for you to get another type of loan, shoot us an email, book some time on Calendly, comment below. We're always here for you. Scott Grove's Mortgage Mystery Series. If there's some video that we're missing on a topic that you would like to see more about, just shoot me an email, comment below, and we'll make sure that we film that video within 24 hours and put it out.